Good evening. This is the Post-Market Recap by AGI Era. Today is Tuesday, January 27th, 2026, and it is shortly after 4:30 p.m. Eastern Time. The scoreboard and technicals. The U.S. session has officially wrapped, and the price action suggests a market grappling with mixed signals, yet ultimately finding some upward momentum in key areas. The S&P 500 finished the day up 0.41%, settling at 6978.6. Technically, the index is now trading with renewed vigor, holding firmly above the 6,900 level and making a concerted effort towards reclaiming the psychological 7,000 mark, a level that will be crucial for sustained bullish sentiment. The Nasdaq 100 showed stronger conviction, closing 0.88% higher at 25,939.744, indicating a continued appetite for growth-oriented technology stocks. The Dow Jones Industrial Average, however, finished lower by 409 points, a decline of 0.83%, settling at 49,003.41. This divergence highlights a rotation within the broader market, with traditional industrials facing headwinds. Crucially, trading volume today was lighter than average for the S&P 500, with approximately 2.4 billion shares traded. This implies that while the S&P and Nasdaq saw gains, the move lacks the robust conviction typically associated with heavy institutional buying. Investors should view these gains with a degree of caution, as lighter volume can sometimes precede reversals or indicate a lack of broad market participation. Market breadth and sentiment. Under the surface, the fear gauge, or VIX, data was not available today, preventing a direct assessment of market volatility expectations. However, the overall market action suggests a nuanced sentiment rather than outright panic or euphoria. We are seeing a somewhat broad-based, yet subtly divergent picture in sector performance. Money flowed noticeably into the Technology Select Sector SPDR Fund, XLK, which gained 1.35%. Meanwhile, the Utilities Select Sector SPDR Fund, XLU, also saw a respectable rise of 1.31%. The relatively tight spread between these two sectors, both moving higher, indicates that while there's a general positive sentiment, investors are showing a slight preference for growth-oriented tech, even as defensive utilities hold their ground. This suggests Wall Street is positioning for continued, albeit perhaps moderate, economic expansion, with a lean towards innovation. The macro engine room. The primary driver of today's moves can be traced back to the currency and commodity markets, as the 10-year Treasury yield data was not available today, preventing a direct analysis of its impact on rate-sensitive sectors. Meanwhile, the US dollar index is significantly lower, down 0.28% on the day, settling at 95.62. This decline, pushing the dollar near a 4-year low, is attributed to renewed concerns about potential currency intervention and ongoing Federal Reserve policy watch, as well as broader geopolitical tensions that appear to be favoring USD selling. A weaker dollar is a significant macro consequence. It directly provides a tailwind for multinational corporations' earnings, making their overseas profits more valuable when converted back to dollars, and typically supports commodity prices. Indeed, crude oil is trading around $62.45, responding positively to the weaker dollar and potentially tighter supply outlooks, finishing up a notable 3% on the day. This upward movement in oil prices could eventually translate into inflationary pressures, a factor the Fed will undoubtedly be watching closely. The AI and tech monitor. Turning to the leaders of this market, artificial intelligence and big tech. Nvidia finished the day up 1.9% at 188.55. Microsoft closed significantly higher, gaining 2.19% at 480.58. Apple also saw a modest rise, up 1.12% at 258.27. Among the other Magnificent Seven, Amazon surged 2.63% to close at 244.68, while Tesla experienced a slight dip of 0.99% to 430.9101. The notable strength in Microsoft and Amazon today is particularly significant. This robust performance in key tech giants suggests continued investor confidence in their underlying business models and future growth trajectories, even as the broader market exhibits some choppiness. The weakness in Tesla, however, indicates that not all corners of the high-growth tech sector are enjoying the same tailwinds, perhaps reflecting specific company-related news or a rotation within the EV space. After hours and look ahead. Looking at the after hours tape right now, shares of Texas Instruments TXN are moving significantly higher, up over 5.60%. This strong after hours performance indicates potential positive news or analyst upgrades impacting the semiconductor space, a critical component of the broader technology ecosystem. As we pivot to tomorrow, the economic calendar brings us a mixed bag of data that will require careful interpretation. We saw today that U.S. consumer confidence dove to a more than 11.5-year low, which could weigh on future consumer discretionary spending outlooks. However, the U.S. housing market showed unexpected strength, with single-family home prices jumping in November. Investors should specifically watch for any further commentary from Federal Reserve officials following the dollar's recent weakness, as well as how consumer spending data might evolve in light of these contrasting confidence and housing figures. The interplay between these macro factors will be key to understanding market direction. That is your comprehensive closing update. We will see you tomorrow morning for the overnight brief. Disclaimer: this podcast is not financial advice. Data may be delayed or inaccurate. Always conduct your own due diligence.